What makes a company's share price drop 60% in one day? Well, I have an example for you today. And unfortunately for those shareholders of Collection House Group, they saw their capital drop 60% in one day today. I think a lot of those shareholders probably would have sold out today. And if you're a shareholder who bought in today at the low, you've probably actually done fairly well out of it, because I think the low was something like 34 cents, maybe even lower than that. But anyway, today I'm just going to look at what causes a company's share price to drop such an exorbitant amount in just one day. And a reason why I want to look at this company is I was actually thinking of buying this company about 18 months ago. It looked fairly cheap, had a good dividend yield of something like, I think the dividend was 8.2 cents, and I thought it looked quite attractive. But there was one thing that held me back from buying, and I'll get into that reason in a second or so. So to understand what happened with Collection House, we have to go back all the way to 14th of February, Valentine's Day, before we saw the COVID-19 financial panic. This was probably a week or so before that. So the Australian markets were at all-time highs or near all-time highs, and Collection House decided to do a strategic review of their operations and their collection strategies. And the main thing here was how it was going to impact their company's financial statements, and usually that's going to be a bad thing. So it wasn't looking good when they issued this trading halt on Valentine's Day 2020. Now, to understand why I decided to not buy into this company when they looked fairly cheap, you have to look at the chart, and this is the reason I decided not to buy in. It was because the share price was in a downtrend, and when I see the share price in a downtrend, that tells me a couple of things. It tells me the market's not interested in the company. So even if a company looks quite good value, the market's not thinking the same as me, and that always makes me hesitant to buy in. Value players or deep value players would disagree with that. They don't care about the trend of the company, it seems like, anyway. So this is the main reason why. You can see I'll put the trend there. That's that green line sloping from the top left to the bottom right. And this is exactly the sort of chart you don't want to buy into when the share price is going from the top left to bottom right. So I was holding back, buying, I had on my watch list, and what I was doing is waiting for the share price to go into an uptrend, and that's when I might buy in. So you can see the valuations on the right-hand side. Market cap of $151 million at the time of their trading halt. Revenue of 153, operating cash flow 65 million, which is quite good with a market cap of 151 million, and a dividend of 8.2 cents. So with the share price around $1 to $1.05 or something like that, that was a very attractive dividend yield. So I think a lot of people bought in because of that dividend and dividend yield. 4 days after they went into the trading halt, they went into a suspension, and it did not look good. So this was a strategic review and a recapitalization process. And they mentioned something, they had to reconsider the assumptions that underlie the level and timing of collection cash flows generated from PDO assets. And again, that did not sound good, especially because they've mentioned cash flows. So it took a long time to go through both the strategic process and the recapitalization process. The strategic review took, I think, until June, the 2nd of June, when they went, oh, these are the things we have to do differently. But the recapitalization process took even longer. It almost took a year. And finally, on December 24, a really good Christmas present, and I'm being sarcastic when I say good, really good Christmas present for the shareholders, where they came out with the outcome of the process, and the outcome, meant they had to dispose of some PDO assets to Credit Corp, probably their bigger brother, the much better competitor that's on the ASX, and they were selling those assets for $160 million. They might get an extra $15 million over 8 years, which is not much at all. Funds were to reduce senior debt. They also negotiated a 3-year senior debt facility of $45 million on commercial terms, and Credit Corp was kind enough to provide them with a short-term loan of $15 million. So that was the outcome of the recapitalization process. The shares didn't start trading then. It waited until this process was completed, which was January the 4th, and this is what happened. So share price dropped from $1.05 or $1.10 all the way down to 43 cents at close on January the 4th. And what I've got here is a 15-year weekly chart. And why I've included this is the share price closed at its low, historic low, which happened in around late 2008, early 2009, which was at the end of the global financial panic. So this is almost an all-time low. It's not looking good. I'm not even sure where they're headed, if they've sold most of their assets. Not all of them, but most of them. I'm just not sure about the future of this company moving forward. And I saw nothing about management resigning or new management coming in, and that's actually a bigger concern for me moving forward anyway. So that's all I've got on Collection House. Hopefully you're not a shareholder. If you have any comments about Collection House, and if you are a shareholder, leave it in the comments section. Even if you are a shareholder, and I've been, shareholders of companies that have gone through similar things, it's always a good learning experience, and you always have to take something positive away from these circumstances, even though that positive is really hard to take. So again, I'm not a financial advisor, so if you do need some financial advice, make sure you seek out someone who is qualified. The whole point of me doing these videos is to give you ideas, maybe teach you some lessons. I think situations like this is always a good learning process. So make sure you seek out someone who is qualified and can speak to your own financial circumstances. That's all for this video. Have a good day. See you later. Bye.